观众朋友们，大家好，欢迎收看本期的华尔街专访节目。那么今天我们非常高兴了，请到是 Marc Interview 先生。那么他是来自 Bronze Brothers 的资深的经济师，为我们解读一下目前美国经济发展的趋势，以及是中国可能会超过日本成为世界第2大经济体。那么中国经济现在还有什么样的问题？那我们也来看一看华尔街的专家是怎样解读的。Hey Mark, very glad to have you here on our show. Let me start with the U.S. economy, especially the Federal Reserve meeting will take place tomorrow. And there's some deflation concerns about the U.S. economy down the road. So what do you think Federal Reserve should do to prevent the deflation?
Well, I'm not sure that the Fed can do anything in the short run about deflation. I think it's sort of like in some ways other central banks have the same kind of problem. And here's what it is essentially, is the U.S. economy is not having deflation. In fact, at the end of this week, we're going to get the CPI figures, which might even tick up. So it's not a case in the U.S. where we have negative inflation, which is what most people mean by deflation. But I think they were so close to so low of inflation and so low of growth that the Federal Reserve has to demonstrate that it's there to help support the economy. Mm-hmm. And so I think they will see the Federal Reserve do a couple of things tomorrow. Downgrade its assessment of the economy. We've had a recent string of economic data, including the recent jobs data, which has been disappointing. The Federal Reserve has to acknowledge that. Mm-hmm. Secondly, the Federal Reserve is likely to promise or strengthen its commitment to keep interest rates low for an extended period of time. But I think the real question that many investors have is whether the Federal Reserve is going to be buying more assets.
Yeah.
They stopped their asset purchase program back in March. And since then, that's sort of the economy really peaked in the March-April period in terms of job creation, in terms of momentum in the economy. Mm. And so there's some talk that the Federal Reserve could renew their mortgage-backed security program. Essentially what's happening is the Federal Reserve has two main types of assets, treasuries and these mortgage-backed securities. The mortgage-backed securities mature, and there's also often early prepayments. And so what are they going to do with those proceeds? So far, they're just accumulating those proceeds, and that's shrinking the Fed's balance sheet. So there's some pressure on them to expand their balance sheet again. The problem with doing that, though, is one, Treasury yields are already near historic low yields. The mortgage-backed bonds the yields are also near record lows, and the spread between them are also near record lows. So the real impact would probably be more psychological than material. The problem with things is that the Federal Reserve has pumped a lot of money into the banks, but the banks aren't lending it. And there's a lot of reasons why they're not lending it. They have poor balance sheet themselves. They're rebuilding the balance sheet. The rules in which they have to operate under are uncertain. That's also forcing them to husbandry the resources. So I think that it's a question of time and healing for the banks. So I don't really think the Federal Reserve can really do much at this moment to help it. The problem's not serious enough yet to get them over this hurdle, and I think it's I don't think there's much that they can do in the short run. In the longer run, I think that the Federal Reserve has to step in if the banks are not doing their job of lending to consumers and small businesses. The Federal Reserve ought to take that role up themselves, like they did during the Great Depression. But we have ideological hurdles for them to take such an activist role.
Mm. Well, okay, so do you think we need more quantitative easing? If we do, what's going to be the result for U.S. dollar?
Yeah, I think that the whole phrase quantitative easing, I think that's what we call in the market when the Federal Reserve buys assets and things. But technically, I don't think the Federal Reserve really calls it quantitative easing. I think that's something that the market claims it is. The Federal Reserve, I think, considers it credit easing. Yeah. And so can they ease credit more? And I suspect they can by changing some more of their rules. However, in the short run, I think that if the Federal Reserve were to expand their balance sheet by buying more assets, I think that the market would see that as dollar negative. But, of course, the markets are anticipatory in nature. So part of the reason the dollar has fallen in recent weeks is because the speculation that the Federal Reserve is going to do something has risen. And so it could be a case of sell the rumor, buy the fact. Mm-hmm. So we've been selling the dollar in anticipation the Federal Reserve does this quantitative easing. Mm-hmm. And then if they do it, we already know it. And if they don't do it, the dollar can bounce back in terms of a bit of a surprise. Mm-hmm. So barring a major change in the Fed statement, barring a decision to renew their asset purchases, I can see the dollar rallying after the FOMC meeting, at least bouncing back a little bit more.
Yeah, sell on rumors, buy on truth. That's the Wall Street spirit.
Yes.
Okay, let's move on. There's some concern about the double dip situation, and that always refers to when the government stimulus ends. So, where do you think the U.S. economy is heading to once the government spending ends?
Yeah, I think that that's been part of the problem. You know, the U.S. economy grew well above trend in Q4 of 2009, Q1 of this year. But it's not. We think about the stimulus, and we think about the federal government. But what's really been happening is the state and local governments are cutting back and tightening faster than the federal government's increasing spending. So this has acted. So in the first quarter, government sector was already a net drag on the U.S. economy. But I think you're right. As the Federal Reserve and the Treasury has ended certain programs like the Cash for Clunker program or Cash for Appliances, various other schemes, as they've ended them, the economy in that sector has suffered. So it's possible that the real economy is only growing at about 2%, 2.5%. So I think that's a difficulty, and especially with high unemployment. You know, if Europe grows 1%, like the ECB projects, people can live with that. That's what they're used to. But 1% growth, 2% growth in the U.S. is not politically acceptable. And so I think that if there's not a stronger growth, you're going to see more people call for greater stimulus. We're already seeing that from, say, Joseph Stiglitz, the former World Bank economist. On the other hand, we're seeing some domestic people and the Democrats, like Robert Rubin, who's saying that no, let's not go for more fiscal spending yet. The situation's not dire enough to warrant bankrupting our children to help the economy in the short run.
Okay, let's move on to the next topic, which is refers to China. Well, we're still waiting for the second quarter figures, but China possibly can surpass Japan, become the second biggest economy worldwide. Well, how do you look upon the Chinese economy, and what do you think there can be couple problems within the Chinese economy now?
Yeah, I think that it's hard for me to talk about, say, China's problems when the U.S.'s problems are so deep and so serious. I mean, China's probably still growing, even if it's slowing down from Q1 pace. We're still talking about, say, 10% growth or 9.5% growth. Still a relatively robust economy, among the fastest in the world, top 3 or 4 countries. And so I do think that it seems to me wherever capitalism or wherever the markets grow the fastest, there's where you have crisis. And so there's certain imbalances created. For example, in the Japanese newspapers over the weekend, there's discussion of the local Chinese banks lending to state-owned enterprises and local governments-owned enterprises. And what percentage of those are bad loans? The estimate in the paper was about 1 in 5. About 20% of those. And so it does seem to me that China, of course, is going to have a bad loan situation when state-owned enterprise banks are loaning the state-owned companies. It just seems to me to be a recipe for trouble. But on the other hand, it seems to me that China has the money and the political will to prevent a serious meltdown, to prevent what's happened to the U.S. or Europe. I think Chinese officials are well aware that the people won't be very acceptable, that the legitimacy of the government is partly based on the ability to deliver the people higher living standards. And say in the U.S., you talk about double dip in the U.S., that's a renewed contraction. Even though I think that's unlikely, it's possible. But in China's case, what are we talking about? Growth slowing down from 11% to 9%, or God forbid, 8% growth. The rule of 7, right? If China grows 7% for 10 years, they've doubled. And so I think that Chinese problems are, in some ways, in the short run, easier to deal with than the U.S. problems. I'm optimistic that the economic data in the coming days is going to show that the Chinese economy continues to expand at a robust pace, but slightly slower. So exports not quite as great. Industrial production slowing down a little bit. Inflation might pick up above 3%, especially with this latest jump in food prices. It seems to me a lot of Chinese inflation is because of food prices, and the drought and the export cuts from Russia, and likely to spread, is probably boosts Chinese inflation a bit more. And so I think that the issue is, what do they do about the reserve requirements for banks, the required reserves and the loan loss reserves, and those probably go up a little bit further. Inflation, I think, above 3%. And so I think in general, if I could trade problems with China just for a week or 2 weeks, this is when I would do it.
There are also some concerns about the previous the last year 4 trillion RMB investment into the Chinese economy. Do you think that the current economy growth from China is pretty healthy, or from the 4 trillion government investment? Because that government investment cannot sustain; it can only go so far. So when that government spending ends, if China going to face the same problem?
I think that China has more dynamics. In some ways, it's more rigorous and robust than the U.S. economy right now. A greater part of the U.S. economy is owed to fiscal spending. While it seems to me that China has strong other sectors, exports, the industrial, the manufacturing is still very strong. So it seemed to me that while China does have problems, it seems that whether it's a bubble in the housing market, whether it is the aging population and running out of people in the countryside to move to the cities, a lot of problems that China has, but those seem to be a problem of too much growth, too much of a good thing, while the U.S.'s problems seem to be a lot of a bad thing. And so I think that China, it seems to me when an economy grows, such a large economy like China's grows, it never looks right. It's out of balance. And so, yes, it'd be, from a U.S. point of view, it'd be good to see. And I think not only from a U.S. point of view, but also from a Chinese people's point of view, it'd be better to see more of that growth fueled by domestic consumption and like retail sales than by exports. But I think that over time, that kind of transition will be made. But China is such a big and dynamic economy, it'll probably be both export as well as domestic demand. So I think that in the short run, we should expect a status quo policy. But before the end of the year, probably a tighter monetary policy, as long as the global economy stabilizes. It's hard, I think, for Chinese officials to make dramatic changes and reforms when their largest export destination, Europe, still seems to be, even though they look like they're growing fine in Q2, they still don't look like they're complete. They're very fragile still. And I think that if I had the honor to advise Chinese politicians, I would probably say what they already know. And that is sort of, I think it was Dao Jinping who said, when you cross a river, step on the rocks. And right now there's a big river in the world economy. And now's the time to be more cautious than usual.
Okay, thank you very much.
Thank you.
好的，那么感谢您的收看我们这一期的华尔街专访节目，下周再见。